Look, I need you to understand something right now. What's happening in the precious metals market isn't just another rally. This isn't like the little bumps we've seen over the past few years. This is the signal. The one that people who've been stacking silver and gold for decades have been waiting for. And if you're not paying attention, you're going to miss the biggest wealth transfer opportunity of your lifetime. Let me paint you a picture of what's actually happening behind the scenes because the mainstream media isn't going to tell you this. They're too busy talking about tech stocks and crypto, while the real story is unfolding in the metals market. Silver just did something it hasn't done in years. It outpaced gold by a massive margin. We're talking about 71% growth compared to gold's 54%. Now, if you know anything about precious metals, you know that's unusual. Silver typically follows gold. But when silver starts leading, when it starts pulling away from gold like this, that's when you need to pay attention. That's the signal. But here's what makes this even more interesting. While silver is surging, silver mine production has been decreasing. Think about that for a second. Demand is exploding, industrial use is at all-time highs, and production is going down. This isn't a temporary supply hiccup. This is a structural problem that's been building for years. You see, silver isn't just a monetary metal anymore. It's in your solar panels, your electric vehicles, your smartphones, your medical equipment, every single trend that's supposed to define our future. The green energy revolution, the electrification of everything, artificial intelligence infrastructure, all of it requires massive amounts of silver. And we're running out. Now let me tell you what the big players are doing while everyone else is distracted. Central banks just purchased 220 tons of gold in a single quarter. That's a 28% increase from the previous quarter. These aren't small regional banks making emotional decisions. These are the world's most sophisticated financial institutions, the ones with access to information you and I will never see, and they're buying gold at a pace we haven't witnessed in modern history. For 3 years in a row now, central bank gold purchases have topped 1,000 tons annually. 3 years. This isn't a trend. This is a complete shift in how the world's financial system operates. And they're not buying gold because they think it's going to go up 10 or 20%. They're buying gold because they know something about the future of the dollar, about the future of the global monetary system that they're not telling the public. Let me take you back to a moment in history that most people have forgotten. 1971. Nixon closes the gold window. The dollar becomes a pure fiat currency, backed by nothing but faith in the U.S. government. What happened next? Gold went from $35 an ounce to over $800 by 1980. That's not a rally. That's a complete revaluation of what money actually means. But here's what's different now. Back then, it was just the U.S. dollar losing its gold backing. Today, we're watching the entire global monetary system crack at the seams. The BRICS nations are actively working to create alternatives to dollar dominance. Trade wars are reshaping global commerce. Tariff uncertainty is making traditional economic models obsolete. And through all of this chaos, gold and silver are doing exactly what they're supposed to do. They're preserving wealth. I want you to think about something for a moment. Real interest rates, the rates after you account for inflation, are at their highest levels in 18 years. 18 years. In traditional economic theory, that should crush gold and silver. High real rates mean opportunity cost. Why hold a non-yielding asset when you can get paid to hold dollars? But gold and silver aren't just holding up. They're rallying near record highs. That tells you everything you need to know about what's really happening in the financial system. The market is screaming that something is broken. When precious metals rally despite high real rates, it means investors don't trust the system anymore. They don't believe the official inflation numbers. They don't believe the dollar is as strong as the government claims. They're looking at the fundamentals, the debt levels, the money printing, the geopolitical instability, and they're making a decision to protect themselves. Now, here's where this gets really interesting for anyone sitting on significant retirement savings. If you've got $100,000 or more in traditional retirement accounts, you need to understand something. Those accounts are denominated in dollars. Your entire retirement security is based on the assumption that the dollar will maintain its purchasing power. But what if it doesn't? I put together a comprehensive guide on how gold IRAs actually work. It's completely free, and you'll find it in the description below. It covers exactly how you can get physical gold into your retirement account without triggering tax penalties or early withdrawal fees. If you're in that situation where you've built up substantial retirement savings and you're concerned about dollar devaluation, it's worth taking a look at. No pressure, just information you should have. But let me get back to what's happening right now, because the timeline on this is compressing faster than most people realize. Western ETF investment in gold has returned after years of outflows. That's significant, Because Western investors, particularly institutional investors, had been selling gold for years. They bought into the narrative that inflation was transitory, that the Fed had everything under control, that traditional assets would continue performing. Now they're coming back. And when institutional money starts flowing back into precious metals, that's when prices really start to move. Think about the mechanics of what's happening. You've got central banks buying at record levels. You've got industrial demand for silver at all-time highs. You've got mine production declining. You've got Western institutional investors returning to the market. And you've got a global monetary system that's showing cracks everywhere you look. What do you think happens to prices when all of those forces converge? Let me tell you a story about the COMEX, the commodities exchange where precious metals futures are traded. The COMEX operates on a fractional reserve system. For every ounce of physical gold or silver in their vaults, there are multiple paper claims on that metal. It's like a bank that loans out the same dollar to multiple people, betting that they'll never all ask for their money at the same time. This system works fine as long as everyone plays along, as long as people are happy trading paper contracts and never demanding physical delivery. But something's changing. More and more investors are standing for delivery. They're saying, I don't want your paper promise, I want the actual metal. And when that happens, when the ratio of paper claims to physical metal gets tested, that's when you see real price discovery. That's when the suppression mechanisms break down and prices move to reflect actual supply and demand. You want to know what real demand looks like? Look at what's happening in Asia. While Western investors were selling gold for years, Asian buyers were accumulating. China, India, the Middle East, they never stopped buying. They understand something about wealth preservation that Western culture has forgotten. They know that paper wealth can disappear overnight, but physical gold and silver have maintained value for thousands of years. There's a reason why every major empire in history eventually debased its currency. Rome did it, the Weimar Republic did it. Every fiat currency that's ever existed has eventually gone to zero. Not most of them, all of them. The average lifespan of a fiat currency is less than 30 years. The dollar has been a pure fiat currency since 1971. Do the math. Now, I'm not saying the dollar is going to collapse tomorrow. That's not how these things work. It's not a sudden event. It's a gradual loss of purchasing power, a slow erosion of confidence, a steady transfer of wealth from people who hold paper assets to people who hold real assets. And by the time most people realize what's happening, it's too late to protect themselves. Let me give you another historical parallel. 2008, the financial crisis hits. Gold is trading around $800 an ounce. Over the next 3 years, it more than doubles, reaching over $1,900. Why? Because people lost faith in the financial system. They saw the banks get bailed out, they saw the money printing begin, and they moved into hard assets. But here's what most people don't realize. The money printing that happened after 2008 is nothing compared to what's happened in recent years. The Federal Reserve's balance sheet exploded. Government debt levels reached heights that would have been unthinkable a generation ago. And all of that newly created money has to go somewhere. Some of it went into stocks, creating the everything bubble. Some went into real estate. Some went into crypto. But eventually, when people start questioning the value of the dollar itself, it flows into the oldest form of money humanity has ever known: gold and silver. Here's what keeps me up at night, and what should concern anyone paying attention. The derivatives market for precious metals is enormous. We're talking about hundreds of billions of dollars in paper contracts, all leveraged, all interconnected, all based on the assumption that physical delivery will never be demanded in size. But what happens when that assumption breaks? What happens when a major player decides they want physical metal and the system can't deliver? You get a squeeze. Not the kind of squeeze where prices go up 20 or 30%. The kind of squeeze where the entire pricing mechanism breaks down because there isn't enough physical metal to satisfy the paper claims. And when that happens, when price discovery moves from the paper market to the physical market, that's when you see the kind of moves that create generational wealth for people who position themselves correctly. Silver is particularly interesting in this context because the market is so much smaller than gold. The entire above-ground supply of investment-grade silver is a fraction of the gold market. It would take relatively little capital, in the grand scheme of institutional money, to completely overwhelm the physical silver market. And with industrial demand continuing to grow, with mine production declining, with investment demand returning, the setup is there for something truly extraordinary. Let me talk about the psychology of what's happening, because this is just as important as the fundamentals. For years, people who bought gold and silver were mocked. They were called doomers, preppers, conspiracy theorists. The mainstream narrative was that precious metals were relics of the past, that modern monetary policy had evolved beyond the need for hard money, that inflation was under control and the system was stable. Anyone who questioned that narrative was dismissed. But now, those same people who were mocking gold and silver investors are starting to ask questions. They're seeing their purchasing power decline. They're watching their savings lose value in real terms. They're noticing that the official inflation numbers don't match their lived experience. And they're starting to wonder if maybe, just maybe, the people who were stacking gold and silver all along were onto something. This is how sentiment shifts happen. It's not sudden. It's gradual. First, a few people start questioning the narrative. Then, more people notice. Then it becomes acceptable to talk about alternatives to the dollar. Then, it becomes common sense. And by the time it's common sense, the big move has already happened. The people who positioned themselves early, who understood what was coming before it was obvious, those are the people who benefit. Think about what's required for the current system to continue functioning. You need faith in the dollar. You need faith in government debt. You need faith that central banks can manage the economy without creating catastrophic inflation. You need faith that the geopolitical order will remain stable. You need faith that the banking system is sound. That's a lot of faith, and every single one of those pillars is being tested right now. The trade wars aren't going away, the debt levels aren't going down, the geopolitical tensions aren't easing, the money printing hasn't stopped, it's just taken different forms. And through all of this, gold and silver are doing exactly what they've done for thousands of years. They're serving as a store of value when everything else is uncertain. Here's something most people don't understand about precious metals. They're not an investment in the traditional sense. You don't buy gold and silver because you think they're going to produce cash flow or earnings growth. You buy them because they maintain purchasing power when paper currencies don't. They're insurance. They're wealth preservation. They're a hedge against the kind of monetary chaos that destroys paper wealth. But here's the beautiful thing about this particular moment in history. You're not just getting insurance. You're getting insurance at a time when the probability of needing that insurance is higher than it's been in generations. And if the system does crack, if we do see a major monetary reset, if gold and silver do revalue to reflect the true amount of currency in circulation, then your insurance policy becomes the best performing asset you've ever owned. Let me give you some numbers to think about. The total value of all the gold ever mined is around $15 trillion at current prices. The total value of global debt is over $300 trillion. If even a small percentage of that debt loses credibility, if even a fraction of that money flows into gold as a safe haven, what do you think happens to the price? The math is simple. There isn't enough gold in the world to absorb a major flight from paper assets at current prices. Silver is even more extreme. The entire above-ground supply of investment-grade silver is worth maybe $50 billion. That's less than the market cap of many individual tech companies. If institutional investors decided to allocate even 1% of their portfolios to physical silver, there isn't enough metal available to satisfy that demand at anywhere near current prices. Now, I want to be clear about something. I'm not telling you that gold and silver only go up from here in a straight line. Markets don't work that way. There will be pullbacks. There will be periods of consolidation. There will be times when it feels like nothing is happening. But the long-term trend, the structural forces driving this market, those aren't going away. They're intensifying. Every time there's a pullback in precious metals, ask yourself what's changed. Has the debt gone down? Has the money printing stopped? Have the geopolitical tensions eased? Has faith in the dollar strengthened? If the answer to those questions is no, then the pullback is just noise. It's an opportunity for people who understand the bigger picture to add to their positions. Think about the people who bought gold at $300 an ounce in the early 2000s. They had to sit through years of sideways price action. They had to endure people telling them they were wrong. They had to watch other assets perform better in the short term. But they understood the fundamentals. They knew that the monetary system was broken and that eventually gold would reflect that reality. And when it did, when gold went from 300 to 1900, those people were rewarded for their patience and their understanding. We're in a similar setup now, except the fundamentals are even more extreme. The debt levels are higher. The money printing is more aggressive. The geopolitical situation is more unstable. The faith in institutions is lower. Everything that drove gold and silver higher in previous cycles is present now, but amplified. Here's what I want you to understand. This isn't about getting rich quick. This isn't about timing the perfect entry and exit. This is about recognizing a fundamental shift in the global monetary system and positioning yourself accordingly. This is about understanding that the rules of the game are changing and that the assets that preserve wealth during times of change are gold and silver. The signal that stackers have been waiting for isn't just about price, it's about validation. It's about the market finally recognizing what they've known all along, that paper wealth is fragile and that real wealth is measured in ounces, not dollars. It's about watching the mainstream narrative shift from dismissing precious metals to acknowledging their importance. It's about seeing central banks, the institutions that create fiat currency, buying gold at record levels because even they don't trust the system they've created. When you see silver outpacing gold by that kind of margin, when you see mine production declining while demand explodes, when you see central banks accumulating at record levels, when you see Western institutional investors returning to the market after years of absence, when you see all of these forces converging at the same time, that's not a coincidence. That's the signal. The question isn't whether precious metals are going higher. The question is whether you're going to position yourself before the move becomes obvious to everyone else. Because once it's obvious, once the mainstream media is talking about it, once your neighbors are asking how to buy gold and silver, the big gains have already happened. The people who benefit are the ones who understood the fundamentals before they were reflected in the price. This is your moment. This is the opportunity that people who've been paying attention have been preparing for. The system is showing you exactly what's coming. Central banks are showing you with their buying. The market is showing you with silver's outperformance. The fundamentals are showing you with declining production and rising demand. The geopolitical situation is showing you with increasing instability. All the pieces are in place. The only question is whether you're going to act on what you're seeing or whether you're going to wait until it's too late. Because make no mistake, there will come a time when physical gold and silver are difficult to obtain at any price. There will come a time when the premiums over spot price explode because demand overwhelms supply. There will come a time when people wish they had positioned themselves when the signal was clear, but the crowd hadn't caught on yet. That time is now. This is the signal. This is what decades of monetary mismanagement looks like when it finally comes home to roost. This is what happens when faith in paper currencies begins to crack. This is what the beginning of a major monetary shift looks like. And if you understand what you're seeing, if you recognize the opportunity in front of you, then you know exactly what you need to do. The stackers who've been accumulating for years, who've been patient through the sideways markets and the mockery and the doubt, they're not surprised by what's happening. They've been waiting for this. They understood the fundamentals. They knew this day would come. And now it's here. The signal has been given. The only question is whether you're ready to receive it.